Welcome to the AlixPartners Quarterly Industrials M&A Review, covering Q1 2021. In the first 3 months of the year, momentum in deal activity has continued to build. Both deal volumes and value are up significantly over Q1 last year, and with over 2,500 deals worth over 150 billion announced in the quarter, the year has certainly got off to a strong start. We're seeing many strategies driving deal activity, but by far the strongest drivers are those of corporate carve-outs and private equity seeking investment opportunities. Corporate carve-out deal activity is increasing by over 10% per month as boards seek to focus management attention on core activities, at the same time also taking advantage of the high deal multiples being paid. From a private equity perspective, 2020 was a record year for fundraising, with an over 30% increase on the prior year. As a result, deal teams are having to work hard to maintain deployment rates. Looking ahead, we expect to see carve-out activity continue across the industrial sector, with many predicting a record year. We also expect to see ongoing balance sheet restructuring as corporates continue the recovery of the impact of the pandemic. We hope you enjoy this quarter's review, and as ever, your feedback is always welcome. But in the meantime, please stay tuned to hear from Beth Michelson, the Senior Managing Director of Cartesian Capital, as she shares her views and outlook for the year ahead.
Welcome to the first in the series of our AlixPartners Quarterly Industrials Roundup for 2021. I'm truly delighted that Beth Michelson from Cartesian Capital Group can join us today. It's a real pleasure to have you on. Beth, it would be great if you could provide a quick background to Cartesian and your role within the firm.
So Cartesian is a global private equity fund. People usually give us money for exposure to international businesses or into emerging markets. And my role is pretty widespread. I originate transactions, I manage them, I sometimes restructure them, and work on the boards and work towards exits.
So we recently worked together on the Arlington TMS deal. Can you tell our viewers a bit more about this?
Sure. So, as you know, we were hit by a series of shocks in the automotive industry that really took a toll on our operations. It was first the global automotive slowdown and Brexit, and then COVID hit, and the auto plants were shut down across the globe. Created a significant strain on our profitability and our liquidity. And so we needed to reduce our debt and create a more efficient operation and divest of our non-core assets. So we want to focus where we have market leadership, we had global footprint, and where we were well positioned for electric vehicles. It was an extraordinarily complicated process with 2 administrators across multiple countries and continents. But I think we emerged a leaner and more profitable business with a stronger balance sheet and, most importantly, a solid market position.
Regarding the deal itself, what do you think were the critical factors for success?
Well, without a doubt, hiring Alex was the smartest move we made. Your advice, your dedication, your insight. I mean, we had just had the worst quarter in our 7-year history. It was not even clear whether Brexit would be resolved or whether there would be a 10% tax on all vehicles leaving the UK. And you guys came in, you worked so incredibly well as a team, whether it was yourself or Graham or Ian or Heiko leading a call, it was absolutely seamless. Fortunately, we started to have signs of square root recovery in auto, and at the last minute, we had a resolution for Brexit, which was nice, but you guys held it all together. You interfaced with all the stakeholders, you managed expectations, you helped develop the model, you built, rebuilt, and revised it, you negotiated and renegotiated, and you talked to us nearly every day for 8 months. And it was you and Latham & Watkins, and we could not have done it without you.
Thank you for your kind words, Beth. It's incredibly humbling to hear this from you. Just pulling back a little and looking at the broader M&A picture for 2021, what is the Cartesian house view on the outlook for the M&A market, given the expected rollout of the vaccine across the world?
M&A seems to have come roaring back. I think there are two groups. There are the companies that suffered during the pandemic and those that thrived. The ones that thrived are getting valuations through the roof, and the ones that have suffered are getting bought out at a discount. But PE firms have about like 800 billion of dry powder, and we're all anxious to put that to work.
Great. And just in terms of the industrials and automotive markets specifically, how do you see them playing out this year?
I definitely think there'll be more supply chain consolidation, and therefore plenty of automotive M&A. With electric vehicles, there are significantly fewer parts, so there isn't room for as many players. And OEMs want a more integrated solution, so we expect to see more M&A as companies develop a more comprehensive solution for global hybrid and electric vehicle strategies.
You recently launched a Cartesian SPAC. Real congratulations for this. What are the key parameters that you're looking for an acquisition for your SPAC vehicle?
We're looking for fast-growing transnational businesses, the key being transnational. We want businesses that either have an international footprint already or want to use the SPAC proceeds to grow their business internationally. But it's a broad mandate. We're sectorally agnostic, but we want strong, clean companies that will allow for a fairly quick transaction. And we want management teams and companies that are ready to be public, that are ready to report and make their numbers starting the first quarter after a merger. And we're also prioritizing ESG. We're looking at renewables and clean tech and electric vehicles and digital infrastructure for like underserved areas of the world.
Brilliant. And yeah, ESG is definitely a key theme of 2021. But just more broadly, how are Cartesian and also your SPAC approaching ESG? Are you looking at particular metrics, or what's the criteria?
A lot of what we've done historically can be categorized as ESG. I mean, if you take a look at Arlington, it started as a CSR company that we bought from the UK government, and a couple other companies I'm involved with are providing digital infrastructure in Peru and Paraguay and Ecuador, and trying to meet the needs of the underserved populations there. So we've been looking for a decade at the renewable sectors. I have an investment in LED lighting in Brazil, so we're definitely focused on the environment part of this discussion. And we've always thought that we bring good governance to businesses, so that's been key to us from inception.
Beth, many thanks for taking the time to share your wonderful insights with us today. We're really looking forward to collaborating more with Cartesian and TMS going forward.
Thanks, Azeem. It was a real pleasure spending the last 9 months of my life with you, and I hope we get to work together again soon.